A corporation pays its CEO a $50 million bonus in stock options. They deduct every penny from taxable income as a business expense. You drive 40 miles to work every day, you cannot deduct a single dollar. This is how the tax code rewards corporate executives while ignoring workers. When corporations grant stock options to executives, the moment those options are exercised, the company deducts the difference between the grant price and the market price as compensation expense. An executive receives stock worth $10 million, and the corporation writes off $10 million from taxable profit. No cash left the company, but billions in tax liability disappear through executive pay packages designed explicitly to maximize deductions. This creates massive tax shields that eliminate corporate tax obligations while enriching leadership. Private equity firms and tech companies have perfected this. They pay executives almost entirely in stock, creating enormous deductions that erase taxes on operating profits. Meanwhile, the executives pay capital gains rates when they sell, often just 15%, far below the rates workers pay on wages. You cannot play this game. Your commute costs thousands annually, parking fees, tolls, gas, vehicle wear, none of it reduces your taxes. The standard mileage deduction exists only for business use, not commuting to your job. You pay for the privilege of getting to work with after-tax dollars while corporations deduct executive compensation that dwarfs your entire salary. Meals while traveling for work have limits. Your work clothes must be uniforms to qualify. Your home office deduction was eliminated for employees in 2017. Every expense you incur to do your job is your burden paid with money already taxed. Corporate executive bonuses, no matter how excessive, are fully deductible business expenses that reduce taxes owed. The tax code actively encourages corporations to pay executives in stock rather than wages because the deductions are larger and the tax benefit is greater. This is why CEO pay has exploded to 300 times the median worker salary. The system rewards it. Over the last 3 decades, stock-based compensation deductions have cost taxpayers hundreds of billions in lost revenue. That is money corporations avoided paying by compensating executives through equity grants that create paper losses. You cannot defer your commute, you cannot expense your gas, you cannot deduct the miles you drive to earn a paycheck. But corporations can deduct the $50 million bonuses that make executives wealthy while tax liability vanishes. If you think corporations should not deduct excessive executive pay while workers cannot deduct the cost of getting to work, research stock compensation deduction limits at the Center for Economic and Policy Research. Share this video so others understand how the system lets corporations eliminate taxes through executive bonuses while working families pay full freight on every dollar earned.